I've been trading for over 5+ years and I've tried hundreds of different entry models. And it took me years to perfect my entries and learn how to enter a trade the right way. In today's video, I'm going to share with you the 3 different entry models that I use on a daily basis. I'm going to share with you the pros and cons of each entry model, along with the exact criteria on when you should use each one to take the guesswork out of your trading. So with that being said, let's not waste any time and let's get straight into the video. Okay, so in today's video, we're going to talk about how to perfect entries the right way. And this is the exact entry system that I used last month trading to grow my account by over $50,000 or over 53% on the month. So let's talk about the exact criteria that I use in order to achieve these results. So what we have here on the left hand side is we have a nice uptrend in the market where we're making higher highs, higher lows, and we're continuing towards the upside. So if we're in a very clear uptrend in the market, what do we want to see? We essentially want to see this previous resistance now turn into support for this continued push towards the upside. So when we're looking for this retest opportunity, there's really only 2 scenarios that can play out. We either have that continued push back up and towards high of day and above, or we get that break below and we ultimately fail and continue back towards the downside. So how are we going to be able to determine if we're going to fail and break back towards the downside, or if price is ultimately going to have a nice retest and we're going to have continuation back towards the upside? So this is exactly what we're going to talk about in today's video, is how to identify high probability entries, the different type of entry criteria that we look for, all the way from being aggressive to the most conservative. And then we're going to go over the pros and cons of each entry confirmation. And then of course, we're going to go over examples at the end of the video. So let's talk about now the 3 different types of entries. So the 3 different types of entries that we're going to talk about today is number 1, the limit order, which is the most aggressive when it comes to trading. That means you're going to get in every single time because you have a limit order set. The second one is strong price action. It's a more conservative entry model. You're observing price action and you're waiting for the buyers to step in. And number 3 is my personal favorite. It's strong price action plus confirmation. And this is the most conservative entry model, which gives us the highest win rate in the most highest probability setup. So now let's talk about the entry confirmation number 1, the limit order. So the first entry confirmation that we have is our limit order, and the limit order is very self-explanatory. All we're going to do is have a limit order set right at our key resistance now turn into support level. So this is where we're going to have our limit buys, and we're going to have this set right here with a predetermined stop, which stop in this case is going to be the break of structure, which is all the way down in towards this higher low key pivot point. And as for our targets, we're going to be looking in this case for a fixed 1 to 2 back towards the upside. So as you can see right here, this is where our target is. Our stop is going to be all the way back down at our break of structure level. And now we're just going to be waiting for price to hit our limit buy. So you don't have to do anything once you have your order set up. So as you can see, I have an example pulled up, and what I'm going to use in this case is our limit order. So as you can see, we have a clear level of resistance now turning into potential support. All I'm going to do here is have a limit order set. So I'm going to have a limit order set right around our previous break and retest level. I'm going to have a stop at our break of structure point, and my target's already predetermined at a 1 to 2 risk to reward ratio. So when it comes to this entry model, regardless of the price action, as I mentioned, we're going to be getting into the trade no matter what. And let's see how it plays out. As you can see right here, it ends up playing very nicely. We end up having this perfect retest with displacement here, clear stop. We end up having a super nice reaction off of our retest level again. And then we end up having this continued push back towards the upside for a nice 1 to 2 risk to reward ratio. So this is the limit order. It's very nice because now we're getting a super nice entry. We had very minimal drawdown and we end up having this continued push towards the upside. So this is an example of the limit order working out. Now let's go into another example. So we have another break and retest pulled up here. And what we'd like to see once again is this area of resistance now be used as potential support. Once again, we have our limit orders already set. We have our stop predetermined and we have our target set in this case as a 2 to 1 fixed risk reward ratio. So no matter what happens off this key level, we're going to be tagged in and we're going to have our stop and targets already set. And what happens in this case, you can see that during this time, price ultimately ends up coming back into a retest level, no real reaction, but since we have a limit order, we're going to be getting into the position. And now you can see price gravitates down towards our stop fairly quickly and we end up getting stopped out. So as you can see right here, both these were a good example of the limit order in effect. It doesn't matter the context or the price action around the key levels. If you have a limit order or if you have a bracket order set up, you're going to essentially be getting into every single break and retest possible. And now let me tell you the pros and cons on why you should not use the limit order entry. So as you can see right here, what we have in this case is the pros and the cons for the limit order. One of the pros that we have when it comes to the limit order is we get in every time. So we get in every single time, no matter if it's a good or if it's a bad break and retest. This can actually be a pro or it can actually be a con as well. Second, what we have is the best entry. So we get filled on the limit. So that means every single time when price does come down, we're going to get the best entry possible. It also coincides with our third pro, which is getting filled on the bid. So whenever you have a limit order, instead of buying on the ask, you're buying on the bid. So you have a limit order set there. So you're going to get the best fills possible. And then finally, what we have in this case is your highest risk to reward towards high of day. So every single time we get into a break and retest, if we get in that limit order, we're going to have the best entry possible. We're also going to get filled on the bid and we're going to have the highest risk to reward towards high of day. So these are all the pros that we have for the limit order. As for our cons, and the cons in this case is it has the lowest win rate. The reason being is because no matter what break and retest you're getting into, it doesn't matter if it's a high probability or if it's a low probability break and retest, you're going to be getting into that break and retest no matter what, especially if you're looking for high of day plus continuation. So you have around a 30 to 40% win rate depending on the market conditions. Another con is that you are prone to fake outs. So a lot of times whenever you get into any sort of break and retest, a lot of times it can be a fake out. And this also ties into all the other ones above, which is taking unnecessary losses. So whenever you get into every single break and retest possible, a lot of these break and retests can be avoidable if you observe the price action around the key levels. So with this being said, you can see that we have the pros and cons figured out for the limit order. Now let's go on to the second entry model, which is our conservative entry model. So as you can see right here, what we have is our conservative entry model. And now what we're doing is waiting for strong price action. So as you can see, we're still in a clear uptrend, making higher highs, higher lows in the markets. What we like to see now is the reaction that we have off of our previous resistance now turning into support. In this case, what we can do is observe the price action around the key levels and wait for what's called strong price action. So as you can see, once we get that break, now we're coming back for the retest. What we like to see now is the reaction that we have off of your retest level. So in this case, you can see that the buyers are stepping in. What we can do is wait for the candles to close. So once we clearly see these bottom wicks are being formed, we can now look to take an entry after the candle has closed. Our entry point can be on this candle closure. Our stop can be a break underneath this candle low. So instead of risking off this market structure low, we can risk off this candle low, have our stop just a break below. And as for our targets, we can be looking for high day or 1 to 2. In this case, we're just going to target a fixed 1 to 2 just to make it very easy. So we have our targets, entry, stop, and now what we like to see is that continue push back towards upside based off of observing the price action that we have off of our key levels. Now let's go on to what this looks like. So as you can see right here, what we have is a clear level of support. Now we're breaking underneath here with displacement. What we like to see is the reaction that we have off of your retest level. So we can have this level marked out. You can see price pushes towards the upside. So far, we're respecting the bodies of our up close candles. We now are observing the price action. You can also see the next candle is a weak candle. So it's a red candle in this case, signifying that sellers are stepping in. Now you can do is look for an entry with a stop, just a break above, and we can have our targets all the way down in towards low of day and below being a fixed 1 to 2 risk to reward ratio. As you can see, the trade ends up working nicely. We end up having this nice candle as well, confirming that price was most likely going to head towards the downside. And then we get that confirmation that price does indeed head down in towards low of day and below. So this is a great example of observing the price action around the key levels and waiting for the sellers to step in. Now let's go on to another example. So another example we have in this case is a break and retest towards upside. We have our 5-minute range range marked out here. As you can see, we are breaking towards the highs. What we like to see now is the retest that we have off our key level. You can now see the buyers are stepping off this first candle. We have more buyers are stepping in, clear signs that price does want to gravitate back towards the upside. So you can see clearly by observing the price action here with these lower wicks that this name does want to move back towards the upside. We wait for this nice candle close here. This can be our entry point with a stop just to break below, and our targets we can be looking for high of day and above. So let's see how this trade ends up playing out. So as you can see, this trade ended up playing very nicely with the buyers stepping in off our retest level. You can see we end up having a very nice reaction and continuing towards the upside. So with this being said, now let's talk about some of the pros and cons that we have for the conservative entry model. So when we're looking at the pros and cons for our second entry model, pro number one is that we wait for the buyers to step in. So instead of buying in every single break and retest, we're observing the price action and waiting for the buyers to step in off our key levels. Second, what we have is risk is close below swing low. So the most recent swing low that we created, we can risk off that hammer stick candle preferably instead of risking off that market structure low. So our risk will be a lot tighter in comparison to the first entry model. Pro number two, risk reward is still good towards high of day. Once you wait for the buyers to step in, it is very similar to that limit order entry. It's just waiting for one extra candle. So in this case, the risk reward will still be good towards high of day. And then the fourth pro is you can get in majority of the time. So when you wait for the buyers to step in off your key levels, a lot of the times the risk reward is still good, and then you can get in majority of the times before it gravitates towards high of day. As for cons, some of the cons that we do have in this case is it's a medium win rate around a 50%. Depending on the market conditions, it could be a little bit lower. What we do have is a 50% win rate with medium risk reward. I wouldn't really consider this a con. Second one is we're still prone to fake outs, so we're not waiting for clear confirmation that price does want to happen. Sometimes the buyers do step in, but then ultimately end up failing and breaking towards the downside. Number three, taking unnecessary losses. So a lot of times what happens is that you think the buyers are stepping in, so you'll end up entering positions even though the retest isn't as clear. And that kind of ties into my last point, which is more discretionary. So when you add in discretion into your trading, it makes it a little bit more difficult because now you're basing it off of experience. And especially if you're a beginner, you do not want discretion in your trading. When you're more experienced, you know what the buyers look like when they are stepping in. You can read the tape, read the momentum of how fast the candles form. This is very good if you have experience and you know what you're doing. But when you are a beginner, more discretion does not mean it's a good thing, especially when you don't know what you're doing. With this being said, we went over the pros and cons and exactly what the second entry model looks like. Now let's talk about the third entry model, which is the most conservative. So as you can see now, what we have is the last and final, which is my personal favorite. It's waiting for strong price action plus confirmation. So as you can see in this case, what we have is still this clear uptrend on the overall markets, making higher lows, higher highs, and we're continuing to push towards the upside. So what I like to see in this case now for the overall market is the retest and the reaction that we have off of your previous resistance level. You can see that the buyers are stepping in. So this is the strong price action, and now this is the added step, which is plus the confirmation. So as you can see right here, the buyers are stepping in, and now we have that candle close above its previous candle. This is when the buyers are now really in control. When we get that confirmation candle, which means now the current candle is closing above its previous candle. So this is a very bullish sign that price does want to gravitate back towards upside. And in this case, our entry is going to be on this candle close or as the candle is breaking above. There's two different ways you can enter in this, but to make it nice and easy, we're going to wait for this candle to close with an entry. As for our stops can be very tight. In this case, our stop can be a break below its previous candle. So in this case, break below our previous candle. And as for our targets, we can be looking for a fix 1 to 2 back towards the upside. So this is my personal favorite, is waiting for the strong price action plus the confirmation candle. This is the most conservative entry model. But now let's go on to what this looks like here on the charts. So as you can see here on this name, what we have is a clear push towards the upside. What we have formed is your 5-minute range. We also have this down close candle here as well. What we're now really waiting for as price pushes into our key retest level is the strong price action number one, and then we're waiting for confirmation that price wants to gravitate back towards upside. So you can see price pushes down in towards that retest level. Now we're consolidating in this general area, and now you can see price has a nice candle close above with a stop just a break below. And now we're looking for high of day plus continuation back towards the upside. So you can see this chart end up playing out nicely right off our key 5-minute opening range along with our 1-minute order block. And once we got that confirmation candle, we had a very tight stop, as I mentioned, break underneath, and we're looking for a continuation back towards the upside. Now let's go on to another example. Another example here is an immediate retest. So in this case, you can see this is our 1-minute opening range. Of course, this doesn't look like much without context. I'll show you this trade with context here in a second. What we have is the break above your 1-minute range along with a key level here as well. Buyers are stepping in based off this lower wick, but what we're doing is waiting for a strong confirmation candle. As you can see in this case, this candle right here closed below its previous candles. We could be looking for an entry with a stop just to break below, and our targets we can be looking for continuation and above. Now let's see what this looks like. You can see as soon as we got that confirmation candle, we end up having this really nice continuation back up and towards high of day and above. So as you can see right here, this is the third and final entry confirmation, which is waiting for strong price action plus confirmation. So now let's go on to the pros and cons of the third entry model. So the pros and cons of the third entry model. The pro here is that it does have the highest win rate possible. So when you're observing price action and you're also waiting for confirmation as well, you're going to have around a 60 to 70% win rate because you're waiting for that extra confirmation. This, of course, right, is around 60%, 70% to 80% in a more bullish market. In this case, what we have is risk off or swing low. So instead of risking at your break of structure level or risking underneath that break and retest level, we have a very tight stop, which is really risking off the previous candle that we formed. So very minimal risk here. Another pro that we have is you're in the trade for the shortest period of time. So sometimes the break and retest occurs and it happens right away. Sometimes you'll be in a break and retest and you'll just sit in consolidation. So whenever you wait for the buyers to step in and wait for the confirmation, right, you're waiting for that confirmation candle. And whenever you get that confirmation, majority of the times we're going to start gravitating back towards high of day because that's what confirmation's for. And then another pro is you rarely get any fake outs. So if you do get faked out quite often, you can wait for that confirmation candle and there's a very good chance that price is going to gravitate towards high of day and above. As for some of the cons that we do have, lowest risk to reward towards high of day. So if you do like to scale some off at high of day, this might not be the entry model for you because majority of the times when you're waiting for that confirmation, we are fairly close to high of day. Another con is sometimes you miss the trade. So if you do wait for confirmation, sometimes price is already at high of day when the candles do close. So sometimes you might miss out on some good trading opportunities. Another con is buying after a bullish candle. Some people don't like doing this, especially for trading options, is you're buying the ask instead of buying the bid. And whenever you buy after a big green candle, usually that's when the premiums pop. So you're not really getting in the best entry. And finally, what we have is getting filled on the ask. And when you get filled on the ask after a big bullish candle, usually you don't get the greatest entry possible. So that sometimes can be a con, especially if you're trading options. So with this being said, we went over the pros and cons for all three different entry criteria. Now let's have a quick recap. So for the checklist on exactly what we're looking for when using these entry confirmation is number one, we want to make sure that we are trading around key levels. The entry models don't matter unless we are at key levels in the markets, being your previous day highs and lows, your opening ranges, order blocks. If we're trading in the middle of the ranges, these entry confirmations aren't going to matter and we can get faked out plenty of times. Next, what we're going to do is observe the price action. This is something we always want to do, and this is something that we use on the last two entry models. Of course, we don't wait for a price action to develop on the first entry model. I'll talk about some criteria here on when we should be aggressive and when we should be laid back. And finally, what we have is candlestick closure. So we always want to be waiting for those candles to close. As I always mention, right, wicks do the damage, bodies tell the story. So with this being said, when should we be more aggressive? Majority of the times we should always be looking for entry confirmation number 2 and 3, which is waiting for price action plus confirmation. But when should we use the more aggressive limit order? The times when we should use the more aggressive limit order is number one, a clear higher time frame setup. If we have a very clear bias to one side, we can be a little bit more aggressive in the overall market. Another scenario is when we have an A+ setup forming, which also includes higher time frame setups plus news. And then finally, what we have is the downside. So I usually like to be a little bit more aggressive on the downside because a lot of the times what we have is stair step up, elevator down. So if we aren't as aggressive on the downside, then the majority of the times we're going to miss the move. Whereas if we trade towards the upside, we usually wait for the buyers to step in. We could also wait for confirmation as well. When not to use the more aggressive entry model is when there's not a clear higher time frame setup. So majority of the times we do want to be more patient and wait for that extra confirmation. Another scenario is when we're trading inside of a range slash no trend. This happens when we're in consolidation on the higher time frames and there's a lot of chop. And then finally, when there is no displacement. When there's no displacement on a chart, we want to be very selective and we want to wait for extra confirmation because we don't want to get faked out. So with this being said, now we went over all the entry confirmations, the pros and cons, when we should be aggressive, when we should wait for confirmation. Now let's go over some examples to see what this looks like in real time. All right, so as you can see, we're on my first example here. We're on NVDA. We're on the 15-minute time frame currently. And as you can see, what we have here coming into market open is this double top here on the higher time frames. So far, you can see we're gapping up in the overnight session and in the pre-market here as well. What I'd like to see coming to market open is the break above your 146 for potential continuation towards the upside. So this is the key level that I'm going to have marked out on NVIDIA. And now we can play out the tape on the lower time frames. So as you can see here for Tesla, the key level that we have marked out is our 146.20. What we like to see on NVIDIA is the hold above our 146.20 for this continued push back towards the upside. So as you can see right here on NVIDIA, immediately we got back underneath this 146.20. Currently, you can see we're just kind of consolidating around your higher time frame key level along with this 1 minute opening range. What I wanted to see on this day here for NVIDIA was the candle close back above your 146.20 here on the higher time frames. If we're able to close back above, this will essentially be the confirmation that price does want to gravitate back towards the upside. So as you can see right here on NVIDIA, this is when we finally get that strong candle close back towards the upside. You can see that the buyers are essentially defending your 1 minute opening range along with your pre-market highs. Now we're having this strong candle closure back above. This is where I look to go long with a stop just to break underneath your original candle. Now I'm looking to target a 1 to 2 fixed risk reward back towards the upside. Now let's play out the tape. As you can see right there, we end up having a super solid push right off the bat. Before we go into the live session, I'm going to pop up my screenshot just so you guys know that I did take this in real time. Now let's head on to the live session. As for NVIDIA, I do like this one. Kind of lagging behind the overall market, but the higher time frames is still very much intact. The range that we have established, 142 and this 146. If we can break above your 146, we can see a really nice potential opportunity here on NVIDIA. As you can see coming into market open, I like NVIDIA here lagging a little bit behind, but if we can break above your 146, show some strength above that level, retest, we can be looking for this continued push back towards the upside. Yeah, keep an eye out on NVIDIA. This one is looking like it's trying to break above this 146. That's going to be the key level on the higher time frames, 146 here on NVIDIA. Yep, NVIDIA, I'm looking at the 146 calls. It's breaking above your key level of resistance now and consolidation. Risk would be a break underneath this 146. So let's see if we can break above, hold, and then look for the retest on NVIDIA. So as you can see here on NVIDIA, showing a lot of strength within the first 2 minutes of market open. Now we're above our key levels 146. What I like to see is maintain above your 146 for this continued push towards the upside. As for AMD, this one retested its 1 minute range along with this pre-market high. It seems like this one's a leader towards the upside. We'll also keep an eye out on NVIDIA here as well. If we can close back above, now it's going to be this 146.20. All right, let's see if we can close back above this key level. I'll be looking at the 146. So for NVIDIA, if we can now close back above your 146.20, I'll be looking at the 146 calls for this continued push back towards the upside. Yeah, NVIDIA, I took some of the 146 calls on NVIDIA. Risk is going to be a break underneath this 146 here. The 146 calls on NVIDIA. So as you can see right there, I just entered in the 146 calls. Risk is just a break underneath this 146 key pivot level. And now I'm looking for this continued push towards the upside. So as you can see right there, what I waited for was the confirmation candle back above your 146. And now what I like to see is this continued push back towards the upside. Yeah, we just like to see a hold above this 146 now. As for the SPY, currently you can see SPY's retesting its 1 minute, retesting its 604. Let's see if we can get some continuation on the SPY and Qs. Qs high day here, similar with SPY as well. NVIDIA and AMD should be some of the leaders. At 147.22's next level higher time frame breakout, NVIDIA.
This has room. Key level is 147.22. Takes them off here. Really nice pop on that premiums.
So as you can see for NVIDIA, super solid trade so far. You can see once we're able to reclaim back above your 146.20, we're having this nice push up and towards your 147. Key levels now is going to be your 147.20 and 148 here and above. As you can see, really solid push here on NVIDIA towards the upside. We ended up rejecting off this 148 key level and then ended up getting stopped out the rest of my contracts in profit. But this ended up being a super solid trade while using that confirmation entry. So with that being said, now let's go on to the next example that I do have. As you can see, we're on my second example here. And just to give us a little bit more context, the day previous, we just had news on Apple. Now we are pushing towards the upside here. Key levels I'm going to have marked out is your previous day highs. So as you can see, coming to market open, we have a multiple touches here in your pre-market along with your previous day highs. What we like to see is it maintain above your 207.40 for this continued push back towards the upside here on Apple. Now let's go into the lower time frames and let's play out the tape. So as you can see for Apple, I have the first 5 minutes played out. The key level I have marked out here is your previous day highs 207.40. This is the key level I have marked out that it has to hold above if you want to see continuation. Now what we're also going to mark out here as well, which is going to be your 5 minute range. So you either want to see one of two things, the hold above your 207 for a push higher, or it's going to be the break above your 5 minute range for this continued push back towards the upside. Now let's mark out this high and now we can play out the tape. As you can see here for Apple, we are starting to build up these higher lows. You can see we are forming here a double top. Now what I like to see is really just maintain above this 208.20 for this continued push back towards the upside. So the levels I can have marked out is this full down close candle along with this 5 minute range here as well. So we have multiple confluences that we like to see Apple hold for this continued push back towards the upside. And you can see right there so far the buyers are stepping in. You can see these lower wicks. We also get our confirmation candle here as well where we close above our previous candle. This is where we can go look long with a stop just to break below, and now we can look to target a 1 to 2 back towards the upside. Now let's play out the tape. And you can see right there on Apple, we end up gravitating nicely once we're able to hold above our 5 minute range along with our 1 minute down close candle here for that continued push back towards the upside. Now let's go on to the live session that I had for this day.
Your 616 and the reaction that we have off that level. As for some names that I'm interested in, Apple, this one has relative strength. It also had some news yesterday as well. So yesterday we had some news on Apple. Now we're kind of forming this wedge pattern, which you can see we're trying to break towards the upside. So we have news on Apple. We have relative strength. We have a higher time frame breakout as well. Key level for me is going to be this 206. So this 206 level is very key coming to today. You can see we already had a little bit of reaction off your previous day highs. What I would like to see on Apple is a hold of your 206. We could be looking for continuation back up and towards your high day and above, or it's going to be the reclaim back above your previous high day. So Apple's going to be one of my main watches coming to today above your 206. If we can hold above it, so as I mentioned, there's two scenarios, right? The dip down towards your 206, risking off your 206. And below that, or another scenario, which is going to be the break above your previous day highs, 207.37, for this push up and towards your 208.50s and above.
So as you can see here on Apple, my game plan is fairly straightforward. I'm looking for the continuation on Apple, either the hold of your 206, or now it's going to be the break above your 207.30s for this continued push back towards the upside.
Yeah, Apple, I took some of the 207.50s. I have a starter position in the 207.50s. This setup's just a reclaim. Let's see if we can push. If we can break above your 5 minute range, then we can have clear continuation towards 208.50s and above.
So as you can see here, I took the 207.50s on this reclaim above your previous day highs. A little bit more of an aggressive entry, but I took a starter position looking for this continued push back towards the upside here on this name.
Yeah, I ended up stopping at Apple too.
So I ended up stopping out of my starter position here as it broke back underneath this 207. I'm still very much interested in this setup for this potential continuation back towards the upside.
Apple still looks good setting up on the higher time frames. That one did hit high day, but as I mentioned, that one happened so quick. The 5 minute setup still intact. If you can reclaim your previous day highs 207.39, that's going to be your key level for Apple, and then preferably the Qs above your 550 as well. Yeah, I'm going to try Apple once more here. 207.50, same average as before. I like this a lot better here now with the Qs bouncing. Higher time frame still very much intact.
So as you can see here for Apple, I'm back in the 207.50s. I like this entry a lot better than the first one now because the Qs is going to reclaim back above our key levels. Apple on the 5 minute is still holding up. We're building up these higher lows here as well. So now I like to see this Apple continuation back towards the upside. So as you can see there for Apple, really solid push after we're able to reclaim back above your 207 with QQQ reclaiming back above our 549.60s. Now what I'd like to see is really just a hold of your 208 for this continued push back towards the upside.
Yep, I sold some as well. Key level for me now is going to be this 208.50s. I just like to see this hold 5-minute range high. That's going to be our key level for continuation. I personally would like to see Qs hold your 550, push higher, SPY, and then Apple push up in towards this 209 and 209.50 now. Yep, 209.50s.
But as you can see right there for Apple, really solid push after holding above your 208 for a push up and towards your 209.50. As for the QQQ, basically just a lot of consolidation, but right there, that was a good example of waiting for that reclaim above your previous day highs. There was also another entry here as well, which would have been your break and retest on the 5-minute, where you could also look for this continued push back towards the upside. But as you can see right there, that is the trade example for Apple. Now let's go on to the last example that I have for us today. All right, so we're on my final example here. We're on Apple a few days later. Just to give us a little bit more context, we're still very much bullish. As you can see, higher time frames are very much still intact. So coming into this day here on Apple, what I like to see is this continue push up and towards your previous day highs, or now it's going to be the break above your previous day highs 213.33 for this continue push back towards the upside. Now with the levels marked out, let's go on to the lower time frames. Now let's play out the tape. You can see so far within the first 5 minutes of market open, we're just consolidating inside of its 5-minute range. So what we can do is mark out your 5-minute opening range high, and we can also mark out your 5-minute opening range low. So now as you can see right here for Apple, we're starting to break above our 5-minute opening range high. We also do have room up and towards your previous day high here as well. So what I'd like to see is the retest off your 5-minute range for this continued push towards the upside. You can see right here for Apple, we're getting this immediate retest of our 5-minute opening range. You can also see the buyers are stepping in based off these lower wicks here as well. So this is where we can look to take a long position on Apple with a tight stop just to break below. And now we can look to target your previous day highs and above. Now let's play out the tape. And as you can see right there on Apple, we end up having a super solid retest right off your 5-minute range for this nice push up in towards your previous day highs. So as you can see, this is a great example of the conservative entry model that we did have, which was waiting for the buyers to step in. And with that being said, I hope you guys did enjoy the video. If you did, I appreciate it if you guys drop me a like and sub, and I'll see you guys next time for a brand new video. Peace, everyone.